going to show you everything about taxes in QuickBooks Online. So I've just created a test account, which I am going to use to show you how taxes work in QuickBooks. So all of the Canadian taxes are already created within the system. So when you log in, when you're first setting up your taxes, all you have to do is click on this tax on the left, and it's going to bring you to the tax page. Here it's going to ask you to set up sales tax. We're going to click on that, and we're going to choose our province or territory. So here I'm in Ontario, so I would choose Ontario. But you have all the options here. I'm going to choose Ontario, click on save, and then it's going to ask me details about Canada Revenue Agency. So that's who I report my GST to. So we're just going to say that, let's say it's annually, so it'll be yearly as of January to December, and then here is your GST number. The only thing this number will do is show up on the invoices you create to your customers. It's not something that's required, so I'm just going to go next. And okay. And there you go. The taxes are set up for that province. Click on Manage Sales Tax here, and we have all of the tax codes for Ontario. So we have the HST 13%, which is basically all we're going to use for Ontario. If we're doing sales, or let's say I live on the border of Quebec, and I also have to remit sales taxes to Quebec, if we click on Add Taxes up here in the Start Tracking New Provinces, this is where you're going to be able to select different provinces to add to your taxes. If we click on Quebec, for example, it's going to ask you for Revenue Quebec reporting. So the provincial portion is reported to Revenue Quebec directly. Usually you have to meet a threshold of sales before you will start remitting towards Quebec. So if you're not at that point, do not add this, because once you do add it, you cannot undo it. You will be stuck with Revenue Quebec showing up. I will just show you as an example. So we're just going to say it's the same remitting period, and we're going to add. So this is going to add Revenue Quebec on its own. Down here you have the QST, which is its provincial remittance, and then the GST QST, which is their combination federal provincial. So this is okay for the setup if you live primarily in Ontario, because when we click on done, now we're going to see both Canada and Quebec. So if we're putting a transaction in with just GST, HST, the amount will collect in here. Meanwhile, if you use either the QST, GST, it's going to add in here. When you go into prepare return, these are the line items that you're going to have to declare at the end of your period. So this would be just for the QST. And if we go on the Canadian revenue side and we go prepare return, this is going to be your GST on the federal. If you're in Quebec, it's going to be a different return. And if you're in Quebec, you should have chosen Quebec first, because this one here is split. If you live in Quebec, they're both done together on one form. And if you set Quebec up first, you will have just Revenue Quebec, even though you have added Ontario afterwards. So it all depends on where you live, and the province in which you live is the one you should choose. So because we just created the account, I am able to purge it to reset it. So purging it will delete everything in the account. And it's the only way I can remove the sales taxes. This is deleting my entire chart of account. and I have to type yes in order for it to reset itself. And then here it's asking me what type of business. I sell services and create accounts based on my industry. If you don't have an accountant that's going to set up your chart of accounts, that's what I would recommend. If you don't want all the accounts that QuickBooks creates in the chart of accounts, you could choose this one and it will give you the bare minimum so that you could create your own accounts afterwards. But I'm just going to use the recommended one and wipe data. This is the only way you can remove the tax selection that you've created. If you have went along and added the tax agencies for all of the provinces, it's going to get messy and it's not recommended. So if we go back to set up sales tax, I'm just going to show you the difference. So if you set up Quebec first and save, it's going to ask you, and we're going to just say it's yearly. Same thing, GST HST number is only going to show on the sales forms for customers. So here, Revenue Quebec is showing you the prepare return. So this one here now, because it is our primary return, it has all of the GST, which is going to be the first part. And then the lines 200, which would have been the other return, that is strictly for Quebec. But if you live in Quebec, you do them all together. So that's what the form looks like. We're going to close this. And then we're going to go back into manage sales tax. So because Revenue Quebec is reporting basically GST and QST, which replaces HST in Ontario, if we add taxes and add Ontario afterwards, Ontario is going to remit all of it federally. So what happens is it just adds to the same form because it can all fit. The first part of the form is going to be applicable for all of the HST because it all goes to the federal. So if you're in Quebec, you need to set up your taxes as being in Quebec first, and then afterwards you won't have any problems. See? One remittance. If we click on the new, this is where you have all of your forms for your customers as well as your expenses. So if we click on expenses, just for an example, and we're just going to select any old expense account. We'll just take the first one, put an amount, we'll put a flat rate of 100. Right here, it's exclusive of tax. You have the option of putting inclusive of tax. And then here we're going to have all of the tax codes that we have accessible at the moment. So if I put HST, for example, it's going to calculate the 13%. This is the amount that is going to be calculated in the taxes. So we're going to go save and close. Perfect. So that transaction has been saved, as you can see up at the top. And then here we are seeing negative $13. So that would be a refund for the expenses of the taxes incurred. If you click on this arrow, you're going to see paid on purchases. So that's the taxes so far. And then collected on sales. So far, there's nothing in our sales. If we click on the prepare return, we're going to see line 103 is for sales, so there's nothing here. Line 106 is your federal tax credits, and we're going to have the whole $13 for the HST. Now, because that transaction did not imply any Quebec provincial taxes, these ones down here in the 200s are empty. The 203 is going to be the sales collected on the taxes, collected on sales, and the 206 is going to be the taxes collected on purchases. In QuickBooks, you are also able to make adjustments. If you decide to make an adjustment, usually it would not be advisable to do it this way unless the accountant has done your taxes in another system and is telling you what the amount needs to be on your form. Legally, you cannot save a form and have different amounts than what you remitted. So it is important to have the exact same amounts on your form as you remit to the government. If the accountant did say that there was a discrepancy, that for some reason your company calculates it differently or at a different percentage for any which reason, here we have an adjustment account. This is the account in which the transaction is going to pull from the adjustment. If you don't want this to have an effect on your accounts in your chart of accounts, what we suggest is using the same GST HST payable right here. And what this is going to do, it's going to go in and out. So let's say we make a $3 adjustment. Oops. 3 and so this adjustment is going to be at the end of 2023. We're going to save. So now with that adjustment, it's going to change what is here. So this added to our ITCs. If you wanted it to remove, it would have had to be in negative. If we close this here, it's going to reflect in our box up here because this is the overview of the return. Another thing, if you have the magnifying glass here at the top, you're going to be able to see the sales tax adjustment that we just created because here we have our most recent transactions. If we click on the sales tax adjustment, it's going to show you when you made the adjustment, which account you're using for the adjustment, on which tax line, and if you made an error, let's say it was supposed to be a -3, you could always delete that here at the bottom. But we're going to leave it for the moment, and I'm going to show you what it did to the tax account. So we're going to go into bookkeeping and chart of accounts. And we're going to go see your chart of accounts. So I haven't been in it yet. That's why it's asking me to see it. And then here we're going to have our GST HST payable. So here it's still showing $13. So if we click on account history, we're going to see the details in the account. We could close this. It's just showing us we have a little filter to play with, which we don't need at the moment. So here the tax adjustment is going in and out, and this is canceling itself out. So it's not having an effect on the books itself, but this is the expense that added that $13. So this is what is in our accounting at the moment. If this was an amount that needed to increase the account, you would have used a different account in your adjustments. So if that was the case, you could delete this one, which will delete both, and redo the adjustment if it's not done properly. Oh, let's go edit, which will open it, and we can delete it this way. Perfect. So it's like we never did it, so we're back at $13 here. And if we go back into the chart of accounts, in the GST payable, we're back to $13 as a refund, and it's still, the other transactions are gone because we just deleted them. If for any reason you need to adjust both this account and you need to add it to the payroll taxes and you want it on your return, if the best option is to use the form, so either the invoice or the expense, to put either or into the account. If you're an accountant or you're opening a period in QuickBooks, for example, you already have a you have a trial balance that you're trying to import or upload to start in QuickBooks because your company's already running, then in this case, you would put the trial balance, so every account in your trial balance and the debits and credits that apply to it. Now, when you get to your tax account, we're going to select it here. We're just going to type GST because it's going to find it a lot better. In your payable account, when you select the GST, you have a couple options. So if you click on sales tax, when you are selected the sale account, the taxes account, and you click on it, it's going to let you select which account you want to affect in your taxes. So for example, if I had a credit for Quebec, that would be 206. There you go. Let's say $4. Really gotta stop doing that. And then let's say I had a sale. Let's just take any income account. And let's say you also have the choice, if it's not the tax account, under sales tax to select the taxes that are applicable. So let's, for example, say it was a Quebec tax that should be allocated to this $20. Those taxes are going to add itself here at the bottom in the journal entry. This is going to give you the next account to tally it up. So this side has 23, and so does this side. So you don't see it necessarily on the taxes, but the taxes are being added to the 20 automatically. So you're only going to see it down here. Now, if we save this, we're going to go save and close. That $4 that we added is now, and the $20 is now on this tax return. So if you click on prepare return, we're going to go look at the line 101. Also, if you click on any of these amounts in blue, it's going to show you the entry that went with it. So this one, for example, the journal entry is $20 in negative, and that's why it's in negative on the return. So technically it would have been $20 on this side if it was an actual sale and not going into your receivables. And whenever you put a new line on the journal entry, it's going to tally everything up into that line. We're going to go save and close, and that's going to have it set up as an actual sale in the taxes. So that's how you can adjust different transactions and have them affect the taxes in QuickBooks. And then here is going to be your credits. So if we click on this magnifying glass, we're going to have that journal entry here again. So if we wanted to put the $4 on this side, for example, also in these boxes, you can do equations. All you have to do is write it and then subtract. Don't know if that worked. Let me just do this. I'll just put there we go. So now they're balancing. Now if we go save and close, we're going to go back into the taxes, and you're going to see it moved from sales to purchases. it stayed in the same line item. So the 206, it just moved from positive to negative. Because we chose that line on the journal entry, the 206. All forms, you are able to delete them with the more. And because we're deleting the journal entry, now it's no longer there. So it removes it from here, which also removes it from the chart of accounts. Ideally, you want the amount that you are remitting to equal the amount in the chart of accounts in your GST payable on that date. If you had a bunch more transactions, let's say we add an invoice for last year that hasn't been paid. We're just going to create a sample. And we're just going to go save and close. Those taxes to the invoice are going to be showing in a previous period. That's fine, but then you have to keep in mind that because it's in a previous period, it's not going to be included in this amount here. Because I have never filed sales taxes before, if I go into prepare return, I am able to modify this start date. If I include the start date to include all transaction, that's when it's going to give me the same amount that's in that account. So that's the only thing you have to keep in mind if there's a discrepancy between what is in this box here to be remitted and what is in the account within the chart of accounts for that tax account. It can be the same thing with future invoices if it's past the due date. So you have the balance here on the right of the account and the balance. Here, if we go into the invoice, I'm going to also show you something that can be helpful. So if we click on more, we have transaction journal. This is going to show you exactly which accounts, which amounts hit. So we have this amount going into the accounts receivable. We have this amount going into the sales service account. And then we have this amount in the sales. So if you're used to seeing the debits and credits of your transactions, this is how you can access them through that option in the bottom of the invoice. When you click on more, transaction journal, that's where that is. So now if I go back into sales, it's not in this period. Once you do file a return, so if I prepare the original return, let's say I didn't do last year yet, so we'll file our 2022. It's only going to give me the amount for 2022. So then that would have been the one transaction. The line 101 is going to be the sales and revenue for that invoice. If there was, if there's anything like deposits and you're using something, we're just going to mark this as filed. We're going to go all done and we're going to pay it later. If you're adding a transaction, either an expense or an invoice, let's do a deposit, for example. So if you're adding funds into the account through the bank deposit, you are going to have the option in sales taxes to either use a 0 rated or out of scope. out of scope, if it's something like equity the owner is adding to the account, that's when you're going to use out of scope, because you don't want it to be added to your line 101, which is going to be your total revenue for that period. Very specific for things like revenue coming into the company for either from a loan. Those things would be out of scope because they're not revenue per se, and they don't belong on your tax return. So that's when you use out of scope. If you use zero rated or exempt, it's still going to show under the revenue for that period. So here we have the first year, and this would be our current open year. So if we go back into the chart of accounts and we go back into the payable, now you can see that that amount has moved into the suspense account. So everything is going to be managed from that tax page over here. So what happened was when we filed that return, QuickBooks created a filed sales tax and removed that amount from our GST payable account. Now, what happens is now when you're in taxes, it's allocated to this return, and because it's a payment, it shows me record payment as an option. So when you do record payment, this is when you're going to put the date of the payment, which bank account you paid it from, and the total amount you paid. If for any reason you didn't pay the exact amount, put the amount that you did pay, and then there's going to be an option to add a second payment if you made it in if you made the payment at different times. Here you also have the additional option of adding interest or penalties. So that would be if you made the payment late and Revenue Canada added penalties, you can add that amount here, and this is going to be the expense account that you attribute it to. We're going to close this one. So we did not mark that as paid, so as you can see, it is still gray. It is not green. If we prepare this return here, we're going to go mark as filed. So it won't let you file in the future because you need, if you have any sales, it needs to be taken into account on the return. So the filing date can only be up until today. Oh, wrong one. There you go. So as on this one, it recognizes it's a refund, so it's going to ask you to record refund. Same thing, this is the amount that you're receiving, the date you received it, and which bank account that you're receiving it to. So I hope you understand taxes a little better. If we go back into manage sales tax, I'm going to show you a couple of the different provinces that you can add. So if you click on here, the provinces that are missing are the ones that only have GST. So for example, Alberta, you're not going to find it in this list because they don't have a provincial sales tax. They just use the GST because that's the only one they have is the federal. If you add things like Saskatchewan or British Columbia, it's going to add an additional reporting agency. If you're not in British Columbia, usually you don't need to add the PST. The same thing for Quebec. If you live in British Columbia, you need to select this first and foremost, because if not, it's going to mess with the reporting and the filings that you will do. So let's just So this is going to add an additional Ministry of Finance. And then if you do that, this is what it looks like. You're going to have that additional PST, and then the GST is still going to report to Revenue Canada in Revenue Quebec because it reports both. So then now you'll have the Ministry of Finance for BC. Same thing with Saskatchewan. It's going to add Saskatchewan at the bottom. And if we close this, it's just going to add another one up here. Now, when you're on the box that's green, that's when you're going to see the returns for that filing, for that ministry. If we return to this one, we're going to see the ones that we filed for this account. Now, going back into bookkeeping, if we put if we scroll down, we're going to see all of these tax accounts that are also created. So every time you add a filing ministry, it's going to add a tax account for those accounts. So this is where it can get messy. If you don't need that account, do not add it, because you cannot remove it without wiping everything in your QuickBooks account. Again, I'm going to reset it. So how we do that is purge company. And then this is going to ask me once again, do I want to get rid of the 4 transactions I've created, the customer, as well as the 41 accounts? And if I want to reset my taxes, I have to type yes and click OK. If not, you're stuck with those taxes. So it's really important to set up your taxes properly from the beginning to avoid any issues down the line with your account. And I hope you understand taxes better now that we've done that.